When do insurance agents get paid? Probably the best way to wrap your brain around the process is to start at the paycheck and work backwards due to the timeline of activity which generates commissions. Pay or takes it way. Most companies work on a monthly payment system which is similar to most jobs. At the end of a given month, aka pay period, each and every transaction which affects the commission is chronologically posted onto an agent's pay statement. There are three general categories of postings. New business, which often has a different commission percentage than the commission paid for policy renewals, or endorsements changes. Each chronological payment on the monthly PIA statement summary has a label depending upon the pay category into which it falls: new business, renewal, or endorsement. New business is entered upon the pay statement by the date determined when it was issued by the insurance company after approving its acceptance as a new policy and accepting the premium from the customer for the policy period or term of the coverage which will be in force. That date is important, more so than the date which the coverage becomes effective. Why? Because the policy might be future effective, since the property has not yet been purchased but the insurance has been set up to become effective for the month and day of the intended purchase. The agent is paid upon for the issued policy based upon the full premium of the issued policy, even though the customer might have only made a partial deposit, or the first of multiple installments. Renewal pay is posted when the insurance company has issued an acceptance of the policy for another policy period up ahead into the future. When you think about that, you will realize from a pay perspective that is a bit complex. The customer has paid not deposit yet, since they have not yet received the renewal or the bill for the initial payment, which, again, might be only a partial payment for the renewal period of time still up ahead and not yet reached in real time. These specifics are important, because the customer might not accept the new policy. They could simply cancel the policy at the renewal, and that cancellation often is within a different month than when the renewal was issued or offered to the customer. The consequence of the cancelled policy directly affects the agent's pay, of course. The commission paid must now be taken back since the insurance company was not paid for the upcoming policy period on which the agent has already been paid. That reversal of the payment made to the agent is called a chargeback, and subtracts from the agent's monthly pay total. The same process occurs when a policy change endorsement is made in the middle of a policy period, which lowers the total premium of that policy. A common which would be simple to understand is the removal of one of the cars on a policy since it was sold or totaled in an accident on which a claim has been paid. Or, when a child has left the household and gotten married, obtained their own separate insurance policy and no longer needs to be covered on the customer's insurance. Lastly, anytime a change endorsement is made which lowers the premium during the policy term, between renewals, then a policy adjustment, up or down in price, will cause a proportional change in the price premium to that policy. Endorsements adding premium cause proportional adjustments increasing the pay, and endorsements causing lower premiums will lower the agent's pay and be reflected as adjustments on the following month's pay statement. Agent's pay, as you can see from my explanation, is much more complex than that which most outsiders would ever surmise, and I have really only touched upon the principal factors affecting the creation of the pay which an agent receives. I hope I have provided some insight into our industry, especially if you are entertaining the thought of becoming a professional insurance agent.